How's it going, everybody? Welcome to Savwire. Today we're going to be talking real quick about three things. The first one is how we might be at a local peak right now with Bitcoin before we start going down. That's the first. I'm gonna explain why. The second is how we might actually still keep going up. I'm gonna explain why as well. And the third, I just want to invite you to subscribe to our Savwire newsletter. You can send me an email at savwire@gmail.com. And I'll put you on the newsletter. Right now I'm trying to set up the email list and it's not working very well, but let's get started on Bitcoin. So I've been looking at the halving data. I'm really into cycles and trying to find patterns. And while it's not always 100% accurate, we can sometimes use that data to make a really precise prediction. And sometimes it ends up being true. Nothing's 100%, but we might be able to get pretty close with this, and I want to show you why. So I've been looking at the halving data, past halving data. This is a quick overview of what I've found. Looking at the first halving and the days after when the first peaks happen, we saw that we got a small peak at 133 days at exactly 1 year, which ties into the 1 year cycle, and then a third peak right around the 1.5 year point. And it's very interesting looking at these. We're also going to look at how it got up to either the CC or the reverse CC for the third peak, and looking at that data, extrapolating it, and looking at why right now we might be hitting the third peak, because right now is we're at an important time cycle, and also we just hit the reverse CC, and I'll show you that on a graph pretty soon. Let me show you that on a graph right now, actually. Let's see. Excuse my scrolling, because for some reason OBS doesn't let me link up to like Windows. Doesn't let me scroll between two windows, because I wanted to show you this live, but it's not. It just doesn't let me. So here we're looking at the third halving. After the third halving, so right now, this is where we're at right now. That endpoint is today, literally. I created this about an hour ago. So, will the third peak hit the reverse CC or a regular CC before the drop? The regular CC is the 618, between the 618 and the 0.66. Right now, we hit the reverse CC. We broke through it, meaning that we most likely will go up, and I'll explain why later. But this could be a fake out, and we're at a point in time where there's 3 points of confluence why it might be a fake out. Today, November 13th, there's three. So today, November 13th, is the new moon. We've had major tops at full moons. I'll go back and show you in the charts. I mean, in the PowerPoint, the points in time when that did happen. But that's one point of confluence. The second point of confluence, well, this is the reverse CC right here. This reverse 618 just reversed, and we've hit that level before in the past, and kept going down. It's been a point of inflection. The third confluence is this is an important time cycle point, because we're at exactly. Actually, I have to go through and calculate. I think if I remember correctly, this is the 3.5 year since we started here. And actually, in the past, that hasn't been an inflection point. So that's kind of, it might be a little bit of a stretch to call that a point of confluence. But, the year and the year and a half have been points in time, have been confluence in terms of cyclical confluence, in terms of being important time cycles. So 3.5 might be an important time cycle where we see an inflection point a reversal. 4-year might be another inflection point, and actually it's going to be pretty much really close to where the halving point is going to be. No one knows really what day it's going to be, but I drew out the blue lines on the right, somewhere between like April, May, June of 2024, when the next halving date for Bitcoin is going to happen. Actually, one thing I forgot to do, which could have been another point of confluence, is look at the Gann vibration dates, because those have been working pretty well with these. I may make another video about that. If you want to see it, just leave a comment and I'll make it as soon as possible. But yeah, let's go through and look at some more of this data for the halvings. It would actually be easy if I just exit out of this and then. All right, so this was looking at local lows. I could make another video on that if you guys are interested. Just let me know. But I don't think it was that groundbreaking as looking at the peaks after halving. Like looking at the trying to find any patterns, and I would say there isn't a super strong pattern. I mean, I don't know if you could say that if there ever is, but I feel like there's some patterns in here. So let's look at it. So usually, this is the days between the first and the second halving. This should be second and the third, 1400. It was 83 days longer than the first one. So just extrapolating, probably the third one should last, plus 80 days. Maybe it'll be shorter, maybe it'll be longer. So the fourth halving is going to be, some sources say it's going to be 24th of April, 2024. Extrapolating here, I got 4th of June. Who knows really? It's probably most likely going to be in April. But let's look at how many days did it take to reach the peak after the halving. So on the first halving, it was 133 days. For the first, it was like a small peak. The second peak was way bigger. It was like a huge bull run, and that was like exactly 1 year. I think it was to the day, or maybe like 1 or 2 days, plus or minus, but it was pretty much exactly within the 1 year cycle. And then the third peak, which was also pretty substantial, if I recall correctly, was almost at the 2 year mark. It was 548 days, and then 548 days is exactly 1.5 years. And the third peak, this is relating to the third peak. Third peak was 4 days after that. So like really close, plus or minus 1 week of 1.5 year cycle. And as a note, the third peak exactly hit that reverse CC, like I showed you in the previous slide. It got up to the 618 Fibonacci and 6.6 reversed. So you take the CC and you just press reverse, flip it upside down, and it's hit that one before and reversed in the first cycle. And that's why I'm thinking maybe this cycle, because this cycle seems like it repeats, like it could be repeating the current cycle we're in the third halving. It could be repeating what happened in the first halving. And then just to continue on the first cycle, looking at the moon phases, it was lining up exactly on the new moons. Like it hit the new moons on this first cycle very, very extremely consistently. The first peak was exactly on the new moon. The second peak was 4 days before the new moon and 1 day after. Like it did a double top. So it went up, hit the peak 4 days before, and then hit the peak pretty much exactly the same dollar amount 1 day after the new moon. The third peak was 6 days after the new moon. And usually, once we start getting into bull runs, you'll find that there's local lows and local highs on the moon cycles. Usually it's a local low on the full moon and a local high on the new moon, plus or minus about 4 days. So it's just a good point to look at in terms of confluence. Like you could see if a moon cycle lines up with a Gann vibration date, or the release of an IPO, like a new IPO, or some big news that's going to come up, whatever. Let's move on to the second halving. So how many days did it take to reach the peak after the second halving? The first big peak was 526 days. That's very close to 1.5 years. That's that time cycle. That seems to be an important date. And then 1082, which is almost very close to the 3-year mark. We had another smaller second peak. And this smaller second peak exactly hit the CC, so the 0.618 fib, not the reversed one, but the regular one. And the first peak hit exactly on the new moon. So let's try to see. Let's look at that chart so you see it visually. And I wanted to show you in person, but not in person, but on the actual live chart. But like I said, it's not letting me. This is I'm just going to show you on the first halving how exactly it lined up with the new moon. So this was a new moon in April. The new moon in December. You saw it hit it a few days before, and then I think there was like a week or maybe 5 or 6 days between those two tops. It did a double top. And then here again, this one was a little bit, the new moon was like 6 days before the local top, but it got pretty close actually. Let's go to second halving. I was going to show you. Yeah, let me just go through and show you what happened on the second halving, where, we had some points of confluence. So here we have the 526 days, which was pretty close to that, 1.5 year mark. And another point of confluence that I've noticed that is really interesting is these peaks happen really close to holidays. Let's keep that in mind. So the reason being for that, my theory, I haven't heard this before, but my theory is that near Christmas break or near any type of holidays, like I've noticed that you have the peaks like right before the summer usually, or right before winter break, because that's when you get all the kids. They're going off. They're on vacation from college. They have a break. They're on Thanksgiving break or spring break or getting ready for Christmas break. And if they see these super high prices right before the break, their Christmas break, right before they go on vacation, then once they're on vacation, they're going to be like, whoa, like Bitcoin went up this high and it just had this huge drop. This is perfect to buy in. And they're going to be buying in on the way down. So yeah, there's going to be liquidity. Those institutions are going to be selling on the way down. And of course, the price is going to be spiking and going up and down, volatility to get people to FOMO in. And, I'm sure many people at this point, if you were to block this off, they'd say, oh, it's going to keep going higher. And they see this drop as a huge buying opportunity. And most colleges and most schools were going on vacation, right around this time. Maybe like a week later, December 23rd, like what Christmas was a few days after this, like on the 24th, so 7 days, exactly a week after this. So yeah, around this time was when people were on Christmas vacation. Johnny got his got all his Christmas stuff, and maybe he got some money from his family, and he was like, I'm going to use that money for Bitcoin trading. Or he sold his Christmas gifts so he could buy Bitcoin. I don't know, but he had free time. Kids had free time during this time, and it was usually they're excited. They're in a really positive mood, jolly atmosphere. So, fuck it, invest. They might think, and that's personally what happened to me. More than once. So that's just something I'm noticing. These peaks get pretty close to holidays, and I think they do that on purpose. So, they know people are going to have free time. People are already spending a lot of money on Thanksgiving and on Christmas, so they're already in the spending mood. They have that inertia for spending, and it's just an interesting data point. So we can extrapolate the next peak. We'll look at data points, and if it's close to a holiday, if it's like a week before the summer holidays or spring break or Thanksgiving or Christmas break. That's another point of confluence, in my opinion. Let's keep going. Peak near summer break. Yeah, here was another one. This was the second halving. Let's see. Yeah, so this was the second peak. The first peak was Christmas. The second peak is actually like literally right when kids go on summer break in the US. I remember college pretty much ended the end of June. A lot of schools are out at the end of June, so same story. They would look at this, be like, whoa, it's my last day of school and Bitcoin is fucking exploding. I'm gonna invest. They see this pullback and they're like, yeah, buy it cheap. Diamond hands, or whatever they say. Then it goes back up. They're like, goes back down. They're like, oh, diamond hands. Like, just keep investing, buying the lows. And they'll buy this and like, yeah, oh dang, it didn't go up past this one, but it's gonna skyrocket back again soon. That's why you never read Reddit, my friends, or any of these. You don't never trust influencers that have more than 100,000 subscribers. Generally, that's actually been my rule. Like after years of looking at Bitcoin, they're always gonna hype you up and screw you over. Paid propaganda, in my opinion. I think those 100K people are either they have a ton of crypto to sell and they want you to, to be buying what they're selling, or they're actually actively getting paid by whoever's running Bitcoin or Bitcoin whales, or most of Bitcoin is in very centralized hands as it is. So that's kind of getting on the verge of a conspiracy theory, but I wouldn't be surprised if that's the case. If you look at the stats, Bitcoin is owned it's something like 5 or 6 people or institutions own like 80 or 90% Bitcoin. Like, you'd be crazy to think, it'd be crazy for them not to just like call each other up and be like, hey, like we should make a plan, to like make the price rise and then, work together to sell their bags to retail pretty much. Sorry, that's kind of a conspiracy theory, but it's something that I've thought about before and makes sense. But either way, we tie in a lot to cycles. So they could be using the cycles, or that could be totally false, and then this is based more on natural cycles. Whatever. Let's keep moving on. Sorry for my rambling. So this is looking at the three-year cycle, second halving. So yeah, you'll notice that 1,095 days is exactly 365 times 3. So that's exactly about, I believe it was like 1 week after we hit this top. So even if you sold at exactly the 3-year cycle. No, is that right? Yeah, 3-year cycle. If you sold exactly at 3 years, you would have made pretty, you could have had a pretty solid gain. I just wanted to show you that on the halving date, the price was 666 exactly. So there's some more confluence whenever you get these weird numbers, these weird numerology numbers. Well, you find those a lot in, you just have to look on the dollar bill and you find esoteric numbers. So Bitcoin has hit on various times like the 666 or $66.6 on like some of these altcoins. So that's just an interesting number to note. You want to look out for those numbers, and when making predictions, sometimes you can use those types of numbers as confluence because it'll get hit. Once again, tying into conspiracy theory, but I'm just an observer. Science is observation. Look up the definition of science. It's making hypotheses, observing, and seeing if those observations are correct or not. And to make those hypotheses, plural, we look at past data, and try to find patterns. So that's just me looking at patterns. I've seen patterns there. Other people have seen patterns there. In my opinion, there's a pattern there. Okay, let's move on. Attention. Note, big rebound from the 0.618 before falling back down. This is on the second halving. So, as I mentioned before, we had this huge run up. We have the second run up that's on the 3-year cycle. So this is what exactly can't remember the exact dates, but this was like either 365 days or 1.5 years out. It looks like 1.5 years out, but July 16th, so July 17th. Yeah, it's like 1.5 years, I think. And then this one was the 3-year cycle. July, exactly 3 years. And we hit the 0.618. We were inside of the CC. So 2 points of confluence, and then we went back down. So I just wanted to show you guys that confluence. I just wanted to show you the actual charts. This is the third halving, so extrapolating. We hit the first peak exactly almost maybe like, within 20 something days of 365. Almost like pretty much 30 days of the 1 year cycle. And then I'll actually, on the next slide, you'll see that if you were to trade, like sell exactly on the 1 year cycle, and that might be a good, we'll have to remember that in my future videos. If I forget to mention that, once we're near a top, please remind me. But if you would have sold on the 1 year cycle, like said, okay, 365 days, that's an important point. We're at a local high. It looks like we're making a newer, lower low. Let's sell it. That would have been a good point, a good place to sell, because check it out. $365 days was the last day to sell before a big drop. It was 11th of May, 2021. And then after that, 7 days is another important cycle. It went down for 7 days, and it bottomed out at 7 days. That happened a few times, actually. And I'll make a longer video about that. I know this video is probably already long. I'm sorry about rambling. I'm going to try to finish this up as soon as I can, but I'm just trying to share all the data with you guys. And if you are interested in a longer video where I literally go through over everything, then shoot me an email to get on that subscriber list, or comment down below. Subscribe, obviously, if you want to see more videos like this. Yeah, so this was the 1 week of the drop where we got that huge drop. So if you see a huge drop, just wait 7 days and you'll usually find a good entry point. Where, we arranged for 80 days after that. So let's see. Let's get to the extrapolation part. So this is where I'm looking at the third halving, 548 days. This is where we had another top that was close to the, what was it, 552? Yeah, 552 is the 1.5 year cycle. Yeah. So we got really close to that 548. 548. Just 4 days. Yeah, 4 days before 552. And we hit a top. So that's more confluence. That's just, well, it's not confluence, but that's showing you it's giving more weight to the 1.5 year cycle on Bitcoin. And let's use those data points to make predictions and look at what might potentially happen. Finally, sorry, I'm getting to the point. All right. So attention, the 3 year cycle was nothing special during the third halving. Okay, yeah. Just one more data point, because the 3 year cycle seemed to be important during the previous ones. I wrote all this up today, so I'm not exactly remembering all of these dates, but I'm just kind of referencing them while I'm going along. So the third halving, attention, will the third peak hit reverse CC or a regular CC before the drop? Because pretty much every cycle before, you've seen it's I think there was like one that didn't, but almost every peak after these huge peaks, we either went back to the reverse CC before heading back down, or we went back to the actual CC. The actual CC here is around 50,000, so 48,000, 50,000. And you see we have, we could make a double top if we hit the CC and go back down. Make a double top of this point right here, this local high, lower high. So that's what we're looking at right now. Is like I was saying, we have confluence right here because we have a new moon literally today as I'm recording this. It's November 13th, 2023. New moons are often local highs, extreme highs, like, important highs. We hit the reverse CC, and I think I might have had it in the previous slide. And this is the 3.5 year. So this was the 3 year, and we just hit the 3.5, which in the past has never been an inflection point, if I recall correctly, but it could be an important point. At the very end of the video, I'll look at the GAN really quick. Actually, no, never mind. Actually, I'll try to see if it's on my charts. Stay tuned till the very end. But let's finish this first. So this could be a swing failure pattern. It could be a fake out for people looking at the reverse CC. It could be people saying like, oh, it broke out. Okay, I'm longing. And then it could go back. There's not many influencers I listen to, but Chart Champions, Daniel, is one that he's like really solid. He's one that he looks at the data and he just has a lot of experience. So his opinion is the only one I really trust, because if it's going to go down, he's going to tell you. He's not a moon boy, nor most influencers are moon boys, but he's neither a moon boy nor a doomsdayer. One of the people that say, it's going to go down, like Bitcoin sucks, whatever. So we're at a pretty important part right now. And like I was saying, I really thought I predicted before that it was going to get to this reverse CC and go down. I made a video about that a long time ago, I think back here, like back in May or something. But it could still possibly do that. But this is such a strong resistance point. It's been such a strong resistance point in the past that I think it actually will keep going up. Like, I reverse my opinion that I made back in May that it was going to get to the CC and go back down. I think it might keep going up. Daniel from Chart Champions is usually right, so he has way more experience than I do, so I think he's right. His opinion is that we're going to get to the regular CC, and after that we might see another drop. Maybe drop into the halving, drop after the halving. If you guys are interested about the halving data, send me make a comment down below, send me an email, whatever, and I'll make that detailed video. But yeah, looking right now, it looks like we're gonna go up into the actual CC, and more confluence. We most likely are gonna go into a very, 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 very bullish point in time in the next pretty much 2 years, 2020 going up into 2025, because we're getting to the very end of the 18.6 year real estate cycle. That's the cycle that Phil Anderson writes about. If you don't know about it, read about it. Akhil Patel came out with a book about the 18.6 year cycle and how to apply it in our current cycle, like what's going to happen in the future, what to look out for. It's an extremely good book. It's kind of a difficult read. It took me about 2 months to finish it. But it's a worthwhile read. I just got kind of freaked out because there's a gecko in my room. I'm in Mexico, in Guadalajara, and there's a gecko that lives in my house, which is good because it eats all the bugs, and cockroaches. But yeah, I see it like maybe once every few weeks. I just saw it. Something scared the shit out of me. I thought it was a huge spider on the wall, but it's just the gecko. But anyways, yeah, pick up Akhil Patel's book. It's called, actually I can't remember what it's called. If you want to pick it up, just comment and I'll get back to you about that. But yeah, Akhil Patel, AKHIL space Patel. Great book. He's part of the property share market, something like that. PSC, yeah, property share market economics group. they're a great resource. And basically they're talking about how with the 18.6 year cycle that started in 2012, it's going to be 18.6 years more or less in 2025, 2026. Based on their research, they know about this stuff way more than I do. The peak of the real estate, pretty much peak of the real estate and the property prices are going to be around 2026. And Bitcoin is going to tie into that as well. Bitcoin started at the tail end of the last cycle, which was from 1992 to 2008. Then we had 4 years down. Let me show you the cycle dates, because I'm trying to make a longer newsletter out of this, and I'm still working on it. But yeah, this is the 18-year cycle. So pretty much the summit is going to be in 2026, and Bitcoin is going to tie into that summit. We just had the mid-cycle recession, which was 2020. That flash crash in March, and then land prices pretty much went down kind of a little bit here, like a small slowdown. They went up a lot during the actual recession, so this might not be entirely accurate for real estate prices. But The Secret Wealth Advantage by Akhil Patel was the book I wanted to mention. But pretty much we are here, like we're right here with stock prices, with the stock market, with the real estate prices, and with the crypto prices, because they all move hand in hand most of the time. Well, they all move in cycles, but Bitcoin's cycle is looking to perfectly tie into this, because pretty soon, right around here somewhere, we're going to have that fourth halving, sorry. We're going to have the fourth halving, and usually after the halving, that kind of restarts the bull market for Bitcoin, and we're going to have the bull market going here up into 2026. I'll make another video on that. But yeah, the bull markets usually last like we said, after the halving, 552, 365 days. So my predicted peaks, I'll touch on that a little bit, is extrapolating the second half and the first and third halving, which was pretty much the 1 year. So we're going to have a peak, and it could happen on both of these. I need to add in the 1.5 year cycle in here as well. I haven't done that yet. If you want me to do it faster and release that video, just leave a comment below to tell me to hurry up. But yeah, let's look at extrapolating just 1 year out after the halving. Predicting that the halving is going to happen on this. Like, once it happens, obviously I'm going to update this. But after the halving in April of 2024, 1 year out, it's going to be about, around March or April of 2025. So pretty close to spring break. Spring break is the end of March, right? So it could happen right at the end of March. That would make sense. 338 days. Make everyone FOMO in and buy a shitload of Bitcoin at 200K or whatever it's going to be, 100K. So the whales have someone to sell to. Or maybe April 24th. Or the top is going to happen around October, maybe closer to Thanksgiving, like right before Thanksgiving. Everyone's going to FOMO in during Thanksgiving break. And there you go, around 526 days, depending on when the halving happens. Because if it happens, this is October based on this date. If it happens in, May 24th, then this is going to be closer to November, July. Yeah, November 24th. Sorry, dyslexia, or ADHD, whatever you want to call it. But yeah, so these are potential peaks. And what did I promise you? I said I'm going to tell you where it might flip and go down, where it might flip and go up. So I told you about the I told you about potential where it might go up to, where it might go. Well, I didn't say where it might go down to. Once it starts going down, I'll give you that prediction. But we might go up to around 50K. Let's keeping track of predictions here. If you want me to share this with you, then send me an email or just comment down below. I'm going to be keeping my predictions here. So yeah, this is the video right here. It's gonna be called Third Peak and Third Halving is happening now, possibly short opportunity. Damn it, I did not want to share that. Oh well. Probably no one's gonna watch this anyway. I'm gonna delete this video, lol. But all right, so if you want to look at the chart champions prediction, he came out with a video today, November 13th. He was predicting new highs on the cryptocurrency market this year, so potentially higher than 69,000, which, Daniel is right a lot of the time. So I was like, wow. Personally, I thought this was going to be a local high, and we're going to go, lower, when we're going to go back down. But Daniel's right a lot of times, so, I missed some good buying points. I might buy in, actually. But yeah, as of this date today, November 13th, you can take a look at this video, or you can just listen to this breakdown. Daniel's talking about how 38,100 is a critical level. 38,107, if it goes above that and, bounces back as support, then it's going to keep going up probably to the next levels. We're going to go to 40K, then 50K. If we do go down, there's a good support level at 34.5K. So, it depends on really, it depends on what the whales want to happen. If the whales want people to FOMO in, and there's not that much volume, so I don't think they're actually doing that. Like, that's why I think Daniel might be right, because if the whales wanted people to FOMO in right now and start buying up before they go down, that might be the case, actually. Everyone might be buying up right now, and then it's just going to go back down. But like I said, Daniel is usually right, so I think it's going to go back. It's going to go up to here before before maybe going down a little bit, like maybe going down back to 40K before going back up. So it depends on how you want to play it. If you want to dollar cost average in and just start buying in slowly, any dips per Daniel at Chart Champions is a good opportunity. That's one strategy. You could wait for it to go back down here. You could short it, be shorting it around here at 38,107. If it goes back up to that point, swing failure pattern, you can short it back down, to the support at 34.5K or possibly lower. If you're thinking that we might get something like what happened around here in March of 2020, like a huge flash crash, that was like 30% or something. That tied into the mid-cycle recession of the 18.6 year cycle. That was like exactly at the midpoint. So, in terms of 18.6 year recycle, we pretty much had like a year of low prices. After that, in the real estate market, we had our bull run with Bitcoin, and then we had our recession with Bitcoin that lasted, November 2021, November 2022, almost exactly a year. 1 year cycle. Once again, looking at the 1 year cycle on Bitcoin. So yeah, even if you buy in and it goes down, like if you hold on, the chances are very, 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 extremely high that Bitcoin is going to go up into 2025. So you're not going to have to wait too long for it to go up. You could just hold on. So, if you do buy in and it does go down, don't be afraid. It's going to go up. Just hold on to it, for a year, for half a year. Most likely it's going to go up faster than that. But yeah, that's good news with Bitcoin. We're looking at a bull run, so easy money, right? Like, just buy in. The flip side argument on that might be that, whales are going to be, knowing that everyone is looking at the fourth halving as an opportunity. Everyone looking at the fourth halving as an opportunity for the next bull run. So a bunch of people buying in and, selling their house and buying crypto or whatever with it. and then it just might tank. They might just cash out and be like, peace out. I don't think that's going to happen. That's always a possibility, but I think more likely they would just drive the price up, into 2025 when everyone's going to be super bullish and FOMOing into everything and saying it's a new paradigm before we get the big crash from like 2026 to 2030, more or less, somewhere in between there. That's tying into the 100-year cycle. The last Great Depression was 1929, so 2029, more or less 100 years. And we're going to have not a pretty big crash, probably the biggest crash we've ever seen in history. At least that's what some smart people are saying. It would make sense because of the 100-year cycle. But this video is getting pretty long. I just wanted to share my thoughts. I tried to make them concise and clear, but I know I went on a long time with this video. Sorry about that. Comment down below how I can make this video better. Comment down below on what else you'd like to see. And remember, the sign up form for me isn't working really well for my email list. So if you want to get on my email list and be informed of these things, get access to special PDFs and all that, then send me an email, savwire@gmail.com. savwire@gmail.com. Just look at the name of my channel, savwire@gmail.com. Thank you for tuning in. This is Eric at Savwire. I hope you have a good day. Happy trading. And yeah, be responsible out there. Take care.